Okay, so now let's take a look at some factors and trends that investors have been looking at and taking into consideration about FIBRAS. And so the first trend that I've seen is capitalization rates have been compressing, okay? As we've seen, FIBRAS have engaged in successful IPOs, follow-ons, they've raised a lot of capital, and they've been putting this capital back into the real estate market. They've been acquiring properties, they've been developing properties. This has been great for sellers of assets. Why? Because you now have multiple vehicles out there with the available capital to execute transactions. And so what has this done? It's driven prices up. Okay? And I can tell you, as prices go up, investors are going to watch very carefully to see if management teams are disciplined in their acquisitions. Are they making acquisitions that are accretive to shareholders or CBFI holders? Another thing that investors are looking at is the impact of quantitative easing and rising interest rates. Okay, FIBRAS and REITs, they're kind of hybrid securities. They have equity and debt-like features, right? You've got the capital appreciation on the equity side, but then you have a stable dividend stream because they need to distribute their earnings. And because FIBRAS and REITs have bond-like characteristics, they can be sensitive to changes in interest rates. And so since the United States Federal Reserve announced the tapering of its program of quantitative easing, I can tell you that all of the major U.S. REIT indexes have fallen. So people are going to be keeping a close eye on FIBRAS as well. They're going to keep a close eye on interest rates. Okay? They're going to keep a close eye on the upcoming announcement by the Federal Reserve in the United States. And in particular, they're going to be looking at the spread between the yield on FIBRAS and the yield on treasuries. Will that spread start to narrow? We're going to be looking closely. Okay. Another hot topic, a lot of chatter out there is regarding management fees. Okay, we've seen management fees, advisory fees, and FIBRAS based on a variety of metrics. We've seen it based on book value. We've seen it based on market capitalization. We've seen it based on lease payments. We've seen it based on acquisitions. We've seen fees if the advisory agreement is terminated. We've seen it based on net operating income. One question is, over time, are you going to start to see some standardization in fee structures? Okay, I can tell you in the United States, where mortgage REITs are externally managed, there has been a degree of standardization. So a typical manager of a mortgage REIT is going to get 1.5% to 2.0% of stockholders' equity, right? And they may also have the opportunity to earn an incentive fee that's based on a percentage of earnings over a hurdle rate. Now, incentive fees now, I'd say, are out of favor. A couple of years ago, if you structured it correctly, you could probably get it. But the base management fee that's tied to stockholders' equity, that's market standard. And I can tell you for mortgage REITs, they're able to employ a significant amount of leverage, so you can really grow that stockholders' equity very quickly. Okay? Now, my personal view on management fees is that while there may be some standardization, I think they will ultimately be determined based on the quality of the assets and the quality of the management team. I believe that the key consideration, regardless of the form of management fees, is whether management is running the business in a manner that leaves money on the table for investors. Okay? So is the advisor growing the business in a manner that's accretive to shareholders? Is the advisor being disciplined in acquisitions, or is it overpaying for assets? Is it buying just to buy? As FIBRAS grow, do the returns generated by the FIBRAS justify the corresponding increase in advisory fees? These are the questions that investors are going to ask. Another hot topic is conflicts of interest, right? So conflicts of interest are inherent in any externally managed structure, and FIBRAs are externally advised. And this is because the sponsor, the loans advisor, is responsible for running the FIBRA, but it generally also has outside business interests, okay? So the question arises, is the sponsor going to spend enough time running the FIBRA's business, or is it going to focus on its outside business interests? So how have FIBRAs dealt with this conflict? I think the main way is you need to create an alignment of interests between the sponsor and the FIBRA, okay? And so, again, if I'm a sponsor and I put my properties into the FIBRA and I get certificates, again, I get tax deferral there, I'm now going to own a significant percentage of the FIBRA. And as we saw before, those certificates are going to be put in a controlled trust. They're going to be locked up. I'm not going to have a lot of liquidity, right? And so the value that I got from my properties is the CBFIs. So if I don't run the business correctly and the trading price of the CBFIs goes down, I just lost a lot of money, just like the other shareholders lost money. Okay, so through the ownership of the CBFIs, the management team has great incentive to preserve and increase the value of the CBFIs. Another important thing to the alignment of interest is management fees, okay? Are the management fees sufficient to incentivize the manager to spend time on the FIBRA? Or is it much more profitable to focus on my other business interests? Another conflict that arises for externally managed structures like FIBRAs, okay? I find a great investment opportunity. Let's say Adolfo has a FIBRA, okay? And he goes out and he finds this amazing property. The purchase price is very low. It's spitting off, tons and tons of income. Okay, does Adolfo have to put that property in the FIBRA, or can he say, you know something, I love this asset so much, I want to keep it for myself, I want 100%, I want to keep it in my outside business, in TM sourcing, okay? The answer is, the FIBRA has the first look at the asset. If a sponsor finds a great investment opportunity, it first has to offer it to the FIBRA, okay? If the FIBRA says no, I don't like this asset, or right now I don't have the available capital to acquire it, then the sponsor can take the property for itself. But the FIBRA has the first bite at the apple always. Also with conflicts, you have a lot of related party transactions, tons of related party transactions in these structures, okay? So for example, the sponsor sells properties to the FIBRA, related party transaction. The FIBRA pays management fees, related party transaction. So investors want to know whether there are appropriate conflicts of interest and corporate governance in place to make sure that these related party transactions are negotiated and executed fairly, okay? So with respect to related party transactions, FIBRAs have made it so that the independent members of the technical committee, the board of directors, have to approve all related party transactions. So in this way, the independent members who are free from conflicts of interest are the gatekeepers for the FIBRA. And the last thing that I would say on conflicts of interest and corporate governance, is that I think of the utmost importance to investors is transparency. Decisions need to be made and disclosed to investors in a manner that is transparent. Investors will tolerate nothing less. Okay. So let's talk about the future of FIBRAs. We already have 6 FIBRAs in the marketplace. Okay, there are certainly more on the way. I've heard rumors that in 5 years you may have as many as 20 FIBRAs. Who knows? But there are definitely more on the way. And so how are these new FIBRAs going to differentiate themselves from the existing FIBRAs? I think one thing that we've already seen is specialization. So if you remember the first FIBRA, it was diversified. Since then, every single FIBRA has been focused on one asset class in particular. And I think you're going to continue to see FIBRAs specializing on one asset class. And eventually, FIBRAs are going to focus on one segment of that asset class. Okay, so with more FIBRAs, how are the existing FIBRAs going to respond to a more competitive environment? So again, I think investors are going to be looking at the way that FIBRAs execute transactions and acquisitions. Are they growing shareholder wealth? Once they buy assets, how are they going to integrate those assets onto their current portfolio? And remember, a FIBRA is a business, okay? So one question is, how are the management teams going to run the business within the confines of the FIBRA structure? Remember, I have to distribute 95% of my net taxable income. I can't retain earnings, okay? How are management teams going to manage their assets and liabilities in a structure where they can't retain earnings? That's one thing that people will look at. Also, we haven't seen FIBRAs sell properties yet. They're not allowed to sell properties for 4 years, and thus far they've only been buyers. Okay? What's going to happen when FIBRAs start selling assets? How is that capital going to be recycled? Is it going to be recycled efficiently? Investors are also going to keep an eye on the supply of high-quality properties in Mexico. Are there enough high-quality properties to support all the capital that's flowing into FIBRAs? If there becomes a shortage, will FIBRAs with development capabilities gain a competitive advantage? Okay? I think you also may see, again, some standardization in the FIBRA market as it matures, perhaps in the area of management fees, perhaps in the areas of corporate governance. Could we see a FIBRA index, right? If there are enough FIBRAs, you could create an index, and this index would increase the profile of FIBRAs and increase the profile of FIBRA markets, of the FIBRA market. And it would also enable investors to better benchmark one FIBRA against its peers. You could also, and believe me, boy do I hope for this, you could see a FIBRA listed on a U.S. exchange. That would be very exciting, at least for me. And so why would you list on a U.S. exchange? A listing would boost the FIBRA's profile internationally. There would be increased analyst coverage, okay, which supports a well-informed investor base and helps ensure that the market understands the FIBRA's business and the FIBRA's industry. And that is crucial. You need analysts and you need the investment community to understand your business and your industry, because that will help ensure that you get fair pricing on your securities. There would also be easier access to the public capital markets. Thus far, offerings into the United States are made under our laws only to the institutional investors. If you were to list on a stock exchange in the United States, you could sell to retail investors. It would open up a whole new investor base. Now, there are also, of course, some disadvantages to listing on a U.S. exchange. I can give an entire presentation on the pros and cons, but today is not that day. But some of the disadvantages are you would be splitting your trading volume in half, right? So you would need a large company with significant trading volume to do that. There are also some upfront and initial costs, and you're subject to the United States Securities and Exchange Commission reporting rules. So there are some disadvantages. Okay. All right. So the FIBRA market is still in its infancy, and thus far as FIBRAs own traditional real estate assets. However, I can tell you REITs and FIBRAs are dynamic vehicles, and I think as the FIBRA market matures, you're going to see it continue to evolve. Now, even in a mature market like the United States, FIBRAS has been around for over 50 years, okay? The REIT product has very recently been used for alternative real estate assets, and this is pretty cool. So there are businesses that you may not have thought of as traditional real estate businesses that have been using the REIT product to unlock the value of real estate. And so how have they been doing this? And they've been doing it in a couple of ways. The first thing is people have been re-examining what is real estate for REIT purposes. Okay, and let me give you an example, right? Billboards. Everyone, are people familiar with billboards? Okay, so if you go to Times Square, yeah, exactly. So if you go to Times Square, right, attached to all of these skyscrapers, you know, there's these signs, right, and they're built into the property, flashing lights everywhere, okay? Those are outdoor billboards. If you drive along the highway, okay, you're always going to see these structures, the signs, okay, those are billboards. Are billboards real estate? So I can tell you the United States federal taxing authorities, the IRS, recently issued 2 favorable rulings to owners of billboards, which are outdoor media companies. The first thing they said is that the billboard structures that are attached to the building, like the ones in Times Square, and also the ones that you can see constructed on the side of the road, because they are designed and constructed to remain permanently in place, they are real estate, okay? So if it's a sign like this one, and I continue to move it around, not real estate. But if it's designed and constructed to remain permanently in place, it's a good REIT asset, okay? Now what about for our United States income requirement? Okay, the income is advertising income, right? No. Because the billboard is real estate, what people are paying is the right to use that real estate, right? They're paying fees to use that real estate, therefore it's rent, okay? And so what does this mean? It means if I have a business where my core business is owning billboards, all of a sudden, I now have good REIT assets. And so what we have seen is people, and a company called Lamar did this a year ago, they have elected to convert into a REIT. They have the IRS ruling in their back pocket, and they're now going to convert to a REIT. Why? Because they're not going to pay entity-level tax. All right? Another area that you've seen this is cell phone towers. Okay? Cell phone towers, they're designed and constructed to be permanently in place. Okay? So a cell phone tower owner called American Tower recently did this. They converted their business to a REIT. Okay. And so, in addition to REIT conversions, that's one way of unlocking the value of real estate. Another thing that we have seen is companies spinning off their REITable assets. And so take, for example, CBS, okay? CBS has many different business segments, TV. They're a media company, but one of their business segments is billboards, okay? Now, they could not do a REIT conversion because the other business segments are not good REIT assets. But what they can do, and what they're in the process of doing, is taking that billboard segment and spinning it out into a REIT, okay? So why are they doing this? As the CFO of CBS recently said, real estate companies trade at higher multiples than media companies. So in this way, they're unlocking the value of real estate. Now what about companies that own a lot of real estate, but the core business is not conducive to a REIT? Okay? The core business is reliant on the real estate. So for CBS, they have many business segments. Okay, they spin out their billboard business. Okay, have fun, billboard REIT. We don't need, those billboards to operate our core businesses. We're not relying on them. Okay. But what about companies where the core business also continues to need the real estate. So what we've seen there is companies using a structure that separates the real estate assets, but you maintain a relationship between the real estate assets and the core operating company. Okay? So the real estate is separated out into a REIT, and then the REIT leases the properties back to the core business operating company. And so the operating company continues to have access to the real estate. And this can be a very good solution for companies that are looking to shift to a capital-light model. Okay, I'll give you two examples. So think if I own a wind farm with wind turbines, right? You know, those big structures, right? So the wind farm generates revenue from the sale of power, okay? The revenue from the sale of power is not good REIT income. However, I can spin out the real estate and the wind turbines, which are permanently attached to the real estate, and I can find a third-party operator to sell the power into the utilities. Okay, so that's an example where I can strip out my real estate assets and then lease it back to the operator, and the operator still has access to the wind farm and to the real estate, but what it focuses on is selling power to the utilities. And so let me give you another example. Is anyone familiar with Hudson Bay Company? Hudson Bay is there are a bunch of department stores in Canada, right? They also own Lord & Taylor. Is anyone familiar with Lord & Taylor in the United States? It's another department store, right? Hudson Bay, they recently agreed to buy Saks Inc., which is Saks Fifth Avenue. I think we have Saks here in Mexico, right? And so what Hudson Bay has done is they've put together a pretty nice portfolio of department store chains. I've got Hudson Bay Canada, I've got Lord & Taylor, I've got Saks, great department store chain. But what they also have is a nice collection of real estate, okay? Between Hudson Bay and Lord & Taylor and Saks, they now have enough real estate, and I'm talking hundreds of properties. Some of them are prime locations, right? Lord & Taylor, Saks Fifth Avenue, prime properties right on Fifth Avenue in Manhattan. They could put all this real estate together and form a REIT, okay? The REIT would own the properties and would lease it back to the department stores, okay? And by monetizing the real estate through the REIT, what Hudson Bay can do is use those proceeds to pay down some of the debt that it's going to have on the Saks Fifth Avenue acquisition. Okay? Now this transaction hasn't been announced. I'm just speculating. Okay? But this is a cool example of a way to unlock the value of real estate. Now, I just want to be clear that in the United States, these transactions are complicated, and it's not quite as easy as just slapping a lease on something and say, okay, I've got a great REIT. You know, you need to work with the regulatory authorities, and the key is that there needs to be separateness between the operating company and the real estate company. Okay. All right. I have one cool slide that I want to show you. It didn't make its way in. Oh well. So, basically, I'll conclude. REITs and FIBRAS are dynamic vehicles that can be used to house a variety of assets. And so far, for FIBRAS, we've just seen industrial, retail, office, shopping centers, hotels, but there are a variety of other assets out there that I think can be put into FIBRAS eventually. So, for example, in the United States, we have mortgage REITs. Okay, could there be a mortgage FIBRA, right? Maybe around commercial mortgage assets. We also have medical office buildings. Could you have a FIBRA that owns or develops medical office buildings and then leases them out to physicians or hospitals, okay? Could you see the FIBRA used around infrastructure ideas, marinas, toll roads, infrastructure projects? What about prisons? So use your imagination when thinking about what would be a good asset for a FIBRA, okay? What about sports arenas? Wouldn't it be cool if Azteca was owned by a FIBRA? And so lastly, I'd like to say, congratulations, Mexico. You have created a commercially viable vehicle that has been validated by the domestic and the international capital markets. It's quite an accomplishment. So thank you very much. Muchas gracias.
Thank you. No sé si tengo alguna pregunta.
Yeah, thank you. The question that I have is more like a sentence. How much money do you think, or have you seen, could be coming to Mexico through FIBRAS from the United States?
How much money?
If you put it in figures.
If you put it in figures, I mean, let's think about this. So, several billion dollars. I couldn't say whether it's, I'd say over 2, maybe 3. Yeah. Yeah.
Thank you, Jacob. I have 2 questions. First is a market question. I want to hear your opinion. And the other is more legal. First question is, what do you think about the latest figure? I don't want to say the name, but everybody here knows the name of the last figure that was the IPO of the last figure. What do you think? It's just a fashion and creates a disgust in the market that this figure was expected as a very global asset investment product, and it was a surprise for everybody that after the success of FIBRA Uno, we have this new FIBRA that the price was got down very fast for market reasons that I think everybody knows. The other is more for Antonio. Maybe you're not aware because you're not. Maybe you know that their financial reform has a section for FIBRAS, but only includes the possibility to not dilute or not dilution of the new investors in FIBRAS. I think this is a practical attempt to incorporate corporate governance in the FIBRAS. But what do you think? Does it should include some other things like the other requirements that corporates have in the US?
Right. And so, with respect to the most recent FIBRA, you know, I did not work on that transaction, so I don't know the specifics. I think it was a couple of different groups coming together to form a FIBRA. It was my understanding. In terms of, you know, the quality of the assets, you know, I just don't know. I mean, I think at the end of the day, what investors look at is the quality of the assets and the quality of the management team. And so I honestly can't speak, you know, to that particular FIBRA. But I do think in general that investors remain optimistic about the sector. I know that FIBRA got off to, I think it traded down a little bit in the beginning. But I'm not exactly sure, you know, why that was. But again, I think, you know, at the end of the day, people focus on the quality of the assets and the quality of the management team.
It's a long-term investment.
That's exactly right. It's a long-term investment. And so like the short-term fluctuations, capital markets are very sensitive. They're sensitive to many external factors that have absolutely nothing to do with the business, right? So perhaps, over the long term, who knows for that particular one, but for the FIBRA asset class in general, I think people are very optimistic. And then to address your second question, in terms of needing to go back to shareholders to approve capital issuances, that's very different than the way we do it in the United States. And so, my personal view is that one of the main benefits of having a public company is the speed with which you can go to the market and raise capital, right? And so when you're required to go back to your shareholders every time you want to make an issuance, it really slows down the process. And as we've seen, the capital markets can change, very quickly. So I think that has the potential to impede the ability of FIBRAS to raise capital. What we do in the United States, okay, is investors at the beginning, they approve a certain amount of capitalization for the FIBRAS. So they say, okay, I approve, the U.S. REIT to issue 500 million shares, okay? So then the U.S. REIT can go and issue shares in multiple offerings until it reaches that $500 million share threshold. It doesn't need to go back to the stockholders each time. But I do understand, the idea that it helps protect investors. But personally, I think it impedes the ability to raise capital. Yeah.
Thanks, Jacob, for the conference. I have a question. You said FIBRAS operates for 50 years in the States. Is it still growing in the States?
Yes.
Obviously, Mexico is once an emerging market, it's a lot of potential. In the States, is it still growing, or is the same business just moving around?
It's absolutely growing in the United States. I think over the last, I'd say, 5 years, the market capitalization of REITs has tripled. And you're continuing to see a variety of new products. As the real estate market changes, new REIT products are emerging. So I'll just give you a very quick example. Prior to a couple of years ago, there weren't any REITs in the United States that owned single-family homes, okay? Once you had the credit crisis and a lot of people, their homes were foreclosed upon, and all of a sudden you had all these single-family homes available for sale at discounted prices, all of a sudden you had a bunch of funds and REITs come in, and they started to buy single-family homes, and so they would buy these homes and then lease them out. Okay, that was an asset class that didn't exist for REITs in the United States, but now you have REITs that own single-family houses and they lease them out to people. So that would be an example of, just in the last couple of years, the REIT product completely adapting to the dynamics of the market.
Thank you very much.
Thank you.
Okay. Thank you.
Bueno, continuamos nuestro siguiente panel. El tema es Friends and Family, el Fíbulas of Home y su emisión de certificados versátiles.